Could the top of the crypto market be here in just the next 3 months? One of the most respected names in on-chain crypto analysis is Benjamin Cowen, and he believes we are now in the final stage of the crypto bull run. While much of the market is looking ahead to 2026, Ben is warning that history is about to repeat and that the cycle could end much sooner than most expect. This is not the first time he has gone against the crowd. In 2023, he predicted that Bitcoin dominance would rise sharply, even as altcoin narratives dominated the headlines. That call turned out to be right. Later, when Ethereum traded well above $3,000, he said it would go home to its trendline near 1,500 before resuming higher. That too was right. These accurate calls have built him a reputation as one of the most reliable voices in the space. And now, his contrarian view carries serious weight. If Cowen is right, the crypto market could peak far earlier than investors are prepared for. In this video, we are going to break down his warning, the signals he is watching, and what it would mean if this bull run really ends within the next few months. And before we jump into it, just a quick reminder, only a small percentage of you watching are actually subscribed. If you're getting value from the videos, hit that subscribe button. It's free, it supports the channel, and you can always change your mind later. Now, let's begin by hearing directly from Ben on where we are in the market right now.
Right now we're testing, the cycle's highs from back in January. But I would still say until Bitcoin gets a weekly close, 2 weekly closes, because 1 weekly close won't do it. 2 weekly closes below the 50-week moving average, then we have to accept the cycle's over. Because historically, that's always when the cycle was over, on a couple of weekly closes below that 50-week moving average. You can see this entire cycle hasn't happened, right? We've had some wicks, no weekly closes. Right now, the 50-week SMA is 99K. So it's going to be 100K, which makes it kind of easy, because I can just sit here and say to you that from starting now for the next, 6 months, whenever we get 2 weekly closes below the 50-week moving average, that's probably a sign that the top is in. The final moves historically have been in Q4. Once we get into Q4, it's reasonable to start thinking about cycle tops. And by the way, when you look at the ROI from the low, that's one metric. If you measure it from the peak and you go peak to peak, you can also see we're getting kind of far into the cycle. And if you measure it from the halving, you can see that we're getting kind of far into the cycle. So I just think that it's been a great cycle for Bitcoin, even though I feel like for some people it doesn't feel like it. But it has been a good cycle. Hopefully we can hopefully we can finish strong. And if you don't time the top exactly and you're wondering, if you're looking for confluence, just remember on weekly closes below the 50-week SMA, no matter where the top was, just be willing to accept the cycle's over whenever that happens.
How are you preparing for the Q4? Are you going to sell some on the way up? Are you DCing out? What's your strategy?
Yeah, I'll sell some. I think it makes sense to, I have an Ethereum position as well. I'll probably get rid of that before. I would say sometime in the next 3 to 4 months, I'll get rid of it.
For the past year, one of the loudest narratives across the crypto industry has been the idea that this cycle is running longer than expected. Raoul Pal, the former Goldman macro strategist who has become one of the biggest voices in crypto, argues that the traditional 4-year pattern no longer applies. His thesis comes down to liquidity and debt maturities. He points out that the ISM, the Institute for Supply Management Index that tracks the health of the economy, was artificially stretched out by the Federal Reserve, extending debt maturities in 2021 and 2022. Instead of the 4-year rhythm, Pal believes we are on a 5-year track, with the peak more likely in 2026 and not 2025. His charts tie Bitcoin directly to global liquidity cycles, and so far the correlations have held up. That view has been echoed by many institutional players, with US spot Bitcoin ETFs approved in early 2024 and now holding millions of Bitcoin in aggregate. The expectation from Wall Street is that institutional inflows are still just beginning. The idea of pensions, sovereign wealth funds, and endowments buying Bitcoin is fueling the argument that this time the cycle will be longer, deeper, and more durable. For the average retail investor, the story feels simple. We are still early, demand is growing, and there is no reason to expect the blow-off top to come this soon. Social media sentiment also reflects this optimism, with most influencers dismissing any talk of a near-term top as overly cautious. The conviction has built into a near consensus. Markets are pricing in more liquidity easing from central banks, AI-driven productivity narratives are spilling into crypto, and altcoins like Solana and newer AI-linked tokens are riding the wave. To most people, it feels like the setup for another 12 to 18 months of upside, but Benjamin Cowen sees it differently, and that is why his voice cuts through the noise. While the majority prepare for a long runway into 2026, Cowen is warning that the landing strip might be a lot shorter than anyone expects. If you look back at every cycle in Bitcoin's past, the tops have almost always occurred in the fourth quarter of the post-halving year. 2013, 2017, 2021, they all peaked near the end of the calendar year following the halving. For him, the current setup does not look much different. Yes, liquidity cycles and ETFs have changed the structure of flows, but human psychology and market rhythm often rhyme more than people want to admit. He points to the current late Q3 weakness in Bitcoin as consistent with past cycles, setting up the possibility of a Q4 top once again. But he goes further. Cowen emphasizes the role of Ethereum in signaling cycle maturity. In his view, Ethereum needed to hit new all-time highs to make the cycle feel complete. That has now happened. Ethereum rallied sharply, tested its 21-week exponential moving average, and broke to new highs exactly as he expected. For Cowen, that is a classic late cycle sign, the secondary leader confirming exhaustion after Bitcoin's earlier moves. The final layer of his argument is technical. He highlights the 50-week simple moving average as the ultimate risk line. In every past cycle, once Bitcoin closed 2 consecutive weeks below that level, the top was in. Today, that line sits near $100,000. Cowen says plainly, if Bitcoin gets 2 weekly closes below the 50-week SMA anytime in the next 6 months, the cycle is finished. No matter what institutions say, no matter how much ETF inflows are reported. For him, that is the non-negotiable line in the sand. His strategy reflects this caution. Cowen openly admits he will be selling into strength in Q4, taking profits on his Ethereum position within 3 to 4 months, and preparing for a possible multi-year consolidation phase heading into 2026. While others are positioning for continuation, he is bracing for an ending. That leaves investors with a critical choice: trust the consensus that this cycle is different, or take Cowen's warning seriously and prepare for an early top. Benjamin Cowen builds his outlook on a stack of on-chain and technical metrics that together point toward maturity in the current cycle. One of his most important tools is Bitcoin dominance. Historically, when Bitcoin starts to assert itself against altcoins late in the cycle, it has been a sign of capital consolidating back into the most liquid asset before a top. Over the past year, dominance has steadily climbed, and Cowen believes this is a major warning. While altcoins may still have bursts of performance, the structural flow of money has been shifting toward Bitcoin, a sign of investors playing defense. He also looks at return on investment measured from multiple points in the cycle. From the lows of 2022 to the highs of 2025, Bitcoin has already delivered multiples in line with prior cycles. Measured from peak to peak or halving to halving, the ratios are also starting to fall in line with historical exhaustion. These are statistical markers that suggest the move is getting late. Liquidity is also part of the picture. While analysts like Raoul Pal see liquidity injections continuing into 2026, Cowen points out that global liquidity has been choppy. The Federal Reserve's bond issuance drained hundreds of billions from markets in 2024, and while easing has begun again, it is not a one-way street. Volatility in liquidity flows can trigger volatility in Bitcoin. If Bitcoin is already late in its ROI metrics and dominant structure, choppy liquidity could be the spark that pushes it into a top. Cowen is also cautious about sentiment. In his experience, when most of the market dismisses the possibility of a near-term top, that complacency is often a danger sign. When everyone believes they have more time, tops tend to arrive faster than expected. The story does not stop there, though. Beyond the technical signals, Cowen also lays out what people should be watching for in real time if his thesis is correct. If Cowen is right, investors need to know the indicators that signal the cycle is over. The first and most obvious is the 50-week simple moving average. If Bitcoin closes 2 weeks below it, the market should prepare for a prolonged downturn. That signal alone has been reliable for more than a decade. Ethereum is another critical piece. Cowen believes Ethereum checking in with its 21-week exponential moving average before breaking to new highs was a late-stage move. If Ethereum starts to struggle at that level instead of breaking higher again, it could be a sign the cycle is running out of steam. Historically, Ethereum has amplified Bitcoin's moves. If Bitcoin tops, Ethereum tends to confirm it within weeks. On-chain data also matters. Metrics like realized cap HDL waves, which track the age of coins being moved, can highlight when long-term holders are distributing. If those metrics show veteran holders cashing out in size, it suggests that smart money believes the top is in. Similarly, if stablecoin flows begin reversing out of exchanges and back into fiat, it is a sign liquidity is exiting rather than entering. For retail investors, Cowen suggests paying attention to narratives as well. When headlines start calling for $500,000 or $1 million Bitcoin within the same cycle, it is usually a contrarian sign. The same thing happened in 2017 and again in 2021. Euphoric calls tend to mark late stages. For viewers, the takeaway is straightforward. If the 50-week moving average breaks, if Ethereum fails to hold its 21-week trend, and if on-chain data shows long-term holders selling, then history suggests the cycle has ended. Cowen is not asking people to panic. He is asking them to respect the signals that have been accurate time and time again. That leaves us with a sobering possibility. If the warning signs play out, what would an early cycle top actually mean for investors and for the broader crypto market? That is where we turn next. And if you want to stay ahead of these signals and know exactly when the market's heating up or when it's giving you those rare buying windows, I break it down every day in the Crypto Nutshell, my free 5-minute daily crypto newsletter. It's built to give you quick, actionable insights so you can make smarter decisions without spending hours buried in charts or headlines. You'll get clear signals on when to buy, when to take profits, and the latest news that could move markets, all delivered straight to your inbox. Just click the first link in the description, enter your email, and you're in. If Benjamin Cowen's outlook proves correct and the bull market tops within the next few months, the impact on Bitcoin investors would be immediate. Many retail participants have entered the market on the back of ETFF headlines, AI-driven hype, and the belief that this cycle is different. If the top forms early, those who wait too long to sell could face years of stagnation before prices recover. That is what happened in both 2014 and 2018. Investors who bought near the top waited until the next halving cycle to break even. The opportunity cost of being trapped for 3 years while capital is locked in is often worse than the drawdown itself. For Ethereum, the implications are even sharper. Cowen already suggested that Ethereum has played its role as a late cycle mover. If Bitcoin rolls over, Ethereum typically experiences an amplified decline. In past cycles, Ethereum has lost 80% or more during downturns. This would also ripple through the altcoin market. Assets like Solana, Avalanche, and other Layer 1 tokens thrive on retail optimism and liquidity excess. When liquidity dries up, they collapse faster than Bitcoin or Ethereum. For investors who rotate into smaller caps at the top, the damage could be severe. An early top would also test the resilience of the new ETF structure. If billions in retail and institutional money flowed into Bitcoin ETFs only to see a multi-year decline follow, there is a chance that mainstream adoption slows. The funds will not vanish, but the enthusiasm of pension managers and conservative institutions could cool. That might delay the timeline for broader crypto acceptance, even if the long-term fundamentals remain intact. In short, an early cycle top would not just hurt portfolios, it would challenge narratives, break assumptions, and force a reevaluation of how much institutional adoption can really change the historical rhythm of Bitcoin. Benjamin Cowen has built his following by refusing to give in to the crowd. He was mocked for calling a surge in Bitcoin dominance during the altcoin mania of 2022, but the data backed him up. He was doubted when he said Ethereum would retrace to $1,500 before resuming higher, but the chart delivered. That track record is why his warning of an early top cannot be dismissed as noise. He is not promising doom for the sake of attention. He is outlining conditions that have historically marked the end of every prior cycle. If his call is right again, then his reputation as one of the most reliable on-chain analysts will only grow stronger. For investors, the choice is clear. Side with the broader market, which is betting on a longer expansion into 2026, or take Cowen's caution seriously and begin preparing now. Neither path is easy. Selling too early can mean missing further upside, but refusing to sell can mean holding through years of drawdown. Cowen himself admits he will not time the exact top. Instead, he will scale out gradually as warning signs appear, securing profits while leaving room in case the market pushes higher. This balanced approach is worth considering. Investors do not have to choose between selling everything or holding blindly. They can take partial profits, reduce risk, and prepare for both outcomes. If the market continues into 2026, they still benefit from upside. If the cycle ends in 2025, they have protected capital and avoided the worst of the downturn. The final question is, which story will define this cycle? Will it be the era when institutional adoption extended the runway and broke the 4-year rhythm? Or will it be another reminder that markets move in cycles no matter how many narratives try to change them? Benjamin Cowen believes history will repeat and that the top is closer than most expect. The only thing left for viewers is to decide whether they believe him. Do you trust the longer cycle narrative, or do you think Cowen will be proven right once again? Anyway, guys, that's all we have for today. Thanks for watching, and I'll see you all in the next video.